welcome to RANsquawk's morning briefing for Friday the 18th of September 2009. Just come out to 9 o'clock now in London, so a quick recap of the overnight news and where we stand at the moment. Starting off with the Asian session, a couple of comments to be aware of. Firstly, Japan's Finance Minister Fuji, who said a cut in issuance of new Japanese government bonds for the current fiscal year could be an option when reviewing the extra budget that was compiled by the previous government. Elsewhere as well, the Bank of Japan Deputy Governor Yamaguchi has warned that the central bank's buying of government debt risk distorting the market. However, in the Asian session, one of the major focus points that has had global repercussions has been a late sell-off in terms of the Shanghai Composite in China. It did fall around near 4% mark, however recovered in the last 15 minutes of trading to close down 3.2% for the session, but did spark a bit of risk-averse trade across the board, and I saw a spike in the dollar index as well as WTI crude futures moving back below the $72 handle. In terms of some of the reasoning there, analysts have noted a slew of upcoming new share issues which did spark partly some profit taking. Talk as well of mutual funds selling ahead of the National Day holiday. Silver Week in Japan is due to start this week and will continue over until Wednesday of next week. The steel sector, that was hit hard as well on an individual sector basis, as after local media reports that the US might impose extra heavy duty on Chinese-made steel tubes, of course sparking some fresh worries in between the relations of the US and China, as we saw rising at last weekend and the beginning of the week. And finally as well, Chinese banks are facing rising risks as lending in the nation surged this year, according to the chairman of the China Banking Regulator Commission. Separately as well, did get a bit of attention that A4 Corp, Japan's third largest consumer lender by revenue, sought to reschedule debt payments, as well as Hong Kong Central Bank saying competition of mortgages may hurt the city's lenders. So again, did see a bit of risk-averse trade on that late sell-off. However, the equity markets in Europe have recovered to trade around unchanged at the moment. Some other things as well from overnight in Europe to be aware of is the IMF's Belka member said the IMF is to revise up the euro area forecast by 0.5% for 2009 and 2010, but said it's concerned about how sustainable recovery in advanced Europe will be. Belka also says that now is not the time for ECB to start exiting from current course of monetary easing. Again, pretty similar tone that we've heard across most of the officials. Gordon Brown being covered in the UK press this morning, as well as EU's Almunia saying it is too early to withdraw from exit strategies, as well as further calls for a coordinated action in response to the global economic recovery. This all, of course, coming ahead of the G20 meeting, which will be at the end of next week. So likely that we will see quite a lot of further comments in today's session and over the weekend. In geopolitical news, ongoing, dominated by Iran at the moment. The Ahmadinejad Iranian president spoke overnight and said that Iran would never abandon its disputed nuclear program to appease Western critics. Elsewhere as well, the IEA document, or the latest document, claims that Iran does have the ability to make an atom bomb, according to AP Newswire. In foreign exchange news, one of the biggest movers has been that of the British pound. In particular, cable at the moment is trading down around 140 ticks. Did get close to testing the 163 handle, as well as the euro sterling. We are now trading above the psychologically important 90.00 handle, which does mark a 4-month high there. It's all stemming predominantly from the latest news coming from the Telegraph that Lloyds Banking Group has been forced to abandon its plan to withdraw from the government's toxic debt insurance scheme after failing to raise enough capital to meet the FSA's strict requirements, obviously highlighting some concerns there in terms of the UK banking sector. The company themselves, Lloyds, did release a statement this morning stating that it continues its discussions with the HM Treasury in respect to its possible participation in the programme. They've also looked at the possibility of reducing the amount of assets covered by the scheme. So the Lloyds shares individually did open down around the 3 to 4% mark. However, they have recovered, trading down around 1% at the moment in line with the rest of their UK banking peers. But again, the pound coming under some pressure from that comment, and also getting some attention was the Guardian news story citing the UN Conference on Trade and Development, who said that foreign investment in the UK has halved in the last year. Taking a look then in terms of other equity-specific news, Glaxo, they're off to a fairly positive start today. Even though the value is pretty small at $150 million, the company has bought a 5% stake in Indian drug maker Dr. Reddy's laboratory, so obviously quite a positive in terms of getting further coverage in emerging markets there for Glaxo. Elsewhere, Daimler is a leading gainer as well in the DAX after they were upgraded to an outperform rating by Sanford Bernstein pre-market today.